Whether it is fate or destiny or just plain luck, we all search for that soulmate that will help us grow, make us better, and help us through the tough times. Yeah, I'm talking about retirement investing. And the soulmate that I speak of course, are high relative safety stocks. They help us grow through their steady capital appreciation. They make us better by paying us a safe and steadily rising dividend. And they help us through the tough times by showing their strength and resilience. And that's why I still love high relative safety stocks. Hello everyone, my name is Jim Penna, the manager of retirement services here, and I'm happy to be hosting this week's special presentation called My Love for High Relative Safety Stocks Lives On, a sequel. The opening I just recited is from a special presentation I produced back on June the 9th of 2017. I thought I would take the opportunity to revisit my feelings for high RS stocks in this presentation. And so my goal is to introduce or reintroduce you to the beauty of relative safety and share some examples of how you can employ the power of relative safety in your portfolio using VectorVest. Let me start with a portrait of my soulmate in action, just to get an idea of how the performance of high relative safety stocks can grow your portfolio. I began with a portfolio called Why I Love High RS Stocks, created back on June 9th of 2017. You'll see the overall performance is very strong. It's up 77.5%. We are in a confirmed down call now. We have over $80,000 of buying power in this portfolio that began with $100,000. It is designed to carry a maximum of 10 positions. We currently have 5 in the portfolio, but we have a lot of powder dry here for the next confirmed up to continue our movement to the upside. Now I'm going to talk about some of those drawdowns that you see in market conditions where the market is sold off back in January of 2018 and October of 2018 for those who may not remember, and then of course the February sell-off that we had. But high relative stocks, as I said, are strong and resilient, and they continue to grow. And with a prudent investment plan behind it, we're able to grow our portfolio in this fashion. Now that 77.5% is about a 21% annualized rate of return. And we use the bellwether S&P 500 to compare, as a lot of folks want to compare it to how does it perform against the overall market. And over this very same time frame, we see the SPX, or the S&P 500, up 44.6%, or 13% annualized rate of return. Again, not quite, but we've nearly doubled those returns using high relative safety stocks with a very prudent investment plan behind it. Before I continue, let me go ahead and take this love story back to the beginning. And it starts with Chapter 7 of our founder and mentor, Dr. Bart DiLiddo's book called Stocks, Strategies, and Common Sense. And I'll show you in a moment how you can download Dr. D's book right from the VectorVest software. Dr. D starts the chapter by discussing the promotional piece of mail he had received touting some low-priced unknown stocks to purchase. But Dr. D knows better, and he wrote that, and that he would prefer to do his own research. And he did, using VectorVest. And he found the promotion to be, let's say, questionable. Of course, the publication featuring the stock reviews included the usual disclaimers that all investments carry risks and so on and so forth. And that's fine, Dr. D noted, but how does one get a handle on finding out how risky a stock is anyway? Well, Dr. D broke it down into 2 parts. He said A, the probability of an unfavorable outcome, and B, the consequences derived from that unfavorable outcome. Simply put, investment risk entails the probability of losing money and the pain associated with the loss. Dr. D goes on to note that each of us needs to know how much money we can afford to lose on any single investment, compared it to a lottery ticket. Right? Even though the risk is extremely high, we're fine with losing a dollar on a lottery ticket because we can afford the loss. Buying stocks, however, is a lot different. We're using serious money in the market, money that can make a difference in the way we live our lives. So once we have established our tolerance for risk, we can focus on assessing the risks involved with individual stocks. Now, relative safety in the VectorVest program is defined as the consistency and predictability of financial performance. Those are the primary factors in assessing relative safety. consistency and predictability. As I often say, what two better adjectives to describe the stocks that reside in your retirement portfolio? In Chapter 7, Dr. D goes on and states that good information on stock safety is hard to find, and so consequently most investors do little more than plug intuition into their investment decisions. Knowing how safe or risky a stock is can make the difference between making you a winner or a loser as an investor. And so I wanted to talk about some of the key factors used by VectorVest in assessing stock safety. We start with earnings consistency. The largest risk that shareholders have is that the company fails to meet earnings expectations. If a company fails to meet those estimates, we know that its stock price often drops. Therefore, the single most important factor in assessing stock safety lies in quantifying the probability that quarterly earnings will meet investor expectations. If a company has a well-established record of consistent and predictable earnings, it is much more likely to meet the market's expectations. Next is company size. It's true that the stocks of large companies generally are safer than those of smaller companies. However, investors should not assume that shares of a company are safe just because they belong to big companies. Dr. D also talks about price behavior, the steady movement of a stock, comparing the price movements to its mean, and Dr. D put a lot of mathematical factors into that price behavior, but it is an important part of relative safety in the VectorVest program. Business longevity is also important, so it's better to deal with the devil you know than with the one you don't. And all other factors being equal, there's less risk in dealing with a company with a longer track record. We then have dividend history. Now, a company doesn't have to pay a dividend to have a safe stock, but if it does pay a dividend, it must maintain or increase that dividend without exception, because a cut in the dividend payout is certainly a black eye for any company and reflects poorly on management and stock safety. And finally, there's debt to equity ratio, a very important part of relative safety. Dr. D writes about the U.S. government allows companies to deduct interest payments as a business expense. And that's nice, but some companies overdo a good thing. They load up on debt beyond the point of being able to report any net earnings. So we need to be aware of companies with excessive debt. A company that can't report positive earnings after interest and tax payments is in big trouble no matter how you slice it. Safe stocks belong to companies with low debt to equity ratios. Now you can go out and try to look up all of that information on your own, and it's possible. It's very cumbersome and frustrating at times, and you can be buried by all of that data. So what Dr. D has done here at VectorVest is create one single indicator that looks at all of those factors. And again, it's called relative safety. And like all of our proprietary indicators in VectorVest, it's on a 0 to 2 scale. Anywhere from 0 to 0.84 is poor, 0.85 to 109 is fair, and we say anything at 1.1 or higher is anywhere from good, very good, or excellent. Putting it on that scale, funneling all of that information through the VectorVest program to give us that 0 to 2 scale rating allows us to compare stocks, and it's a great way to assess the safety of an individual stock. So regardless of how one might assess stock safety, it is important to do it systematically. VectorVest uses a systematic approach to assessing stock safety, and investors should always factor risk into their investment decisions. Dr. D references also in Chapter 7 Benjamin Graham's classic book, The Intelligent Investor, where he discusses the difference between investing and speculating. And basically, this difference is a matter of using knowledge to reduce risk to the point where the odds of winning are in your favor. And Dr. D ends the chapter with this quote: "Intelligent investment decisions cannot be made without including an assessment of stock safety. Do not let stock safety be your missing link." Okay, so with that knowledge in hand, how do we go ahead and apply that to our portfolios to take advantage of the power of relative safety? Well, we do it here in the VectorVest program. And before I go into that, the first thing I want to do is show you how to access Dr. D's book, Stock Strategy and Common Sense. You can do it right here from the main toolbar by going to the Welcome tab. When I left click on the Welcome tab, it'll bring us to a page with a whole lot of good information. But we'll see right along the top it says Download Stock Strategies and Common Sense. Simply click there and the book will download. can scroll down. You can see all of the information. You can even skip ahead to the chapters that you want to go ahead and take a look at. So very easy to do. Simply go to the Welcome tab, click on Download Stock Strategies and Common Sense. What I want to do next is go again back to the main toolbar, and I'm going to go to the Unisearch tab. And I want to start here in our search directory and just introduce or reintroduce you to several of the searches that focus on relative safety in the program. And this is, I just want to show just a few of them. There's many. You can tweak searches, you can build your own searches, but I just want to start here. I'm going to start in the retirement folder, and I'll start with a search called long-term winners RS descending. So this is a great search that shows us that it's sorted by relative safety, the stocks that make the list. These are just some basic parameters on here. It is ultimately the database of any stock greater than $1. That's not a pink sheet stock or a bulletin board stock. And when we run the search, we'll see back, I'm using June 9th of 2017 as our date because that's the date I did the presentation. So we'll see on that date stocks with very high relative safety. What I like to say about relative safety is when RS is above 1.4, all of the other numbers that we ultimately care about when assessing safety and value of a stock come together. Now, not always, but for the most part, you'll see relative value strong. In this case, relative value on Rollins is a little lower, but generally speaking, we'll see strong relative value numbers. RT depends, of course, on the current trend of the market or the underlying stock. Comfort index, right? The price growth persistence we'll see on high RS stocks is very strong. If I continue to scroll over, earnings growth rate, strong on all of these stocks. And while they all don't pay a dividend necessarily, we do see that when they do, their dividend safety and dividend growth numbers are also generally very strong. So that's the power of relative safety. Long-term winners is a great search to look at. Sometimes I like to just quick test the top 10 from that date to this date. Again, this is no money management techniques or strategic defensive measures that we take, but you'll see a nice return over 54%. Another great search is worry-free winners that focuses on relative safety. It's also in the retirement folder. Now you may see a different search. There are two searches in here: worry-free winners with no moving average, and then just worry-free winners. There are two in there in case if you don't have Pro Trader, you won't see the worry-free winners. You'll see no MA. But either way, when we run this search, the type of stocks that come to this list, they have to be a buy-rated stock. You'll see again relative safety very high because it's sorted by relative safety. All of the numbers I spoke about are very strong, and one of my favorite searches. If we go ahead and quick test those top 10 from the night of my presentation to right now, we'll see we're up a very strong 82%. Again, no money management involved here, just giving you some quick numbers. Next, I'm going to go up to the prudent folder and talk about a couple of searches here as well. One is called Safe and Sound, a very good long-term search when you or strategy when you place the proper risk management techniques around it. If I run that search, we'll see relative safety again, very strong on these stocks, and we'll go ahead and quick test the top 10 from that date as well. Once again, no management techniques in place, but very strong returns just to get a sense of the resiliency and strength of high relative safety stocks. And then for those who are familiar with my presentations here from the Retirement Services Division, you know that this next search I'm going to go to is ruler stocks, my very favorite search in the VectorVest program. And you'll see that just to make the list, the stock has to have a relative safety number greater than or equal to 1.4. Relative safety and growth rate, relative safety times growth rate, I should say, is the sort for the search. And when we run that search, again, you'll see the very strong relative safety numbers and all of the other numbers I talked about. And so, of course, we will have a prudent/conservative investment plan behind it. And let me just quickly go into the back tester, and I'll take a minute and walk through how you can do that. So let's back test an idea. I'll choose Build a Custom System, and I'll make this as basic as possible. So we're going to use confirm calls. I'm simply going to go down to the prudent folder, and I'm going to choose ruler stocks. Next, we'll set up our stop criteria. Now, I've been doing this for a long time here at VectorVest, running back tests, finding the best possible prudent investment plans that I could, and I'm going to use Profit Locker Pro, and I'm simply going to use the prudent default setting as a 50% target price, a 15% stop, and then again the proprietary indicators within the Profit Locker Pro. I leave the default settings here. But again, ruler stocks works great with any prudent type of risk management behind it. Let's go to more settings here. We're going to maintain 10 positions. We're not going to close any long position just because we go into a confirmed down. We're going to hold it through there and let the stop criteria extinguish the position. And we'll keep the rest of the defaults where they are. And we'll take no action during a confirmed down call as far as our positions are concerned. I'll hit finish. One other thing I want to do is remember, in this day and age, most of the mainstream brokers no longer charge a commission, so make sure we set that to no commission. And then we'll set our date. And again, I'll use our historical date of June 9th of 2017. As you run backtests, be sure that you name them and put any description you'd like to put in. But for now, I'm going to go ahead and just simply run the backtest. Now, backtesting is a key component of effective trading system development. It's accomplished, as you can see, by reconstructing with historical data trades that would have occurred in the past using rules defined by a given strategy, and that's what I just built there. The results offer statistics to gauge the effectiveness of the strategy. Of course, the underlying theory that any strategy that worked well in the past is likely to work well in the future, and conversely, a strategy that didn't work so well probably won't work as well in the future. In that sense, it is very instructive. Let's take a look at what we just did. We ran our backtest, and again, just like the portfolio I showed in the beginning, it moved very nicely. As the market moved against us, our defense measures have put us into cash a couple of times during the life of this portfolio. Understanding some strategic defense initiatives, for instance, buying put options, collar trades, using the SPY as a hedge with put options on that, can greatly mitigate these drawdowns here. But overall, again, we're at 75% return. That's 22% annualized rate of return over about the last 3.5 years. So well outdoing the S&P 500, taking into account any dividends that may have been paid out or any returns on insurance policies that we might have taken, and we certainly would have in February, in 2018, in both January and October of 2018. So if you're looking for a basic approach to grow your portfolio over time, there is nothing safer or more sure to grow your portfolio than ruler stocks or high relative safety stocks found in the VectorVest program, coupling that with a smart risk management plan or investment plan behind it. And that's just a little insight as to why my love for high relative safety stocks live on. So thank you for taking the time, and if you'd like to learn more about building and managing a high relative safety stock portfolio, you can join me webcast I'll be presenting next week, 3 strategies to protect and grow your retirement nest egg. Simply go to vectorvest.com/web-URS, that's webcast for the ultimate retirement solution, web-URS, and we'll talk about building and managing a safe growth portfolio. We'll talk about the 2 income generating strategies you should be employing if you are preparing or in retirement. And then most importantly, I believe, we'll talk about how to protect your stocks in your entire account from those big drawdowns that we saw on our equity curve looking at the portfolio. So simply go to that link and you can choose a date. I'll be doing it several times next week. Put in your name and email address and we'll reserve your seat for that webcast. Thanks again for taking the time to be here. Stay safe, stay healthy, and we hope to see you at our webcast next week.